Happy Friday, everyone. So we are moving in. We're a quarter of the way through the semester, technically speaking. A little bit more, if you can consider it. Just as a thing to keep in mind, I've not really talked about it, but I do want to remind you that we do have a semester project in this course, and it kind of seems to be a theme in all of my courses. But this one doesn't put as much emphasis right now on thinking about things, but I would encourage you to start thinking about group formations. I believe we said 3 groups in this course. There's 13 people, so we're probably looking at one group of 5 and then 2 groups of 4. So who you want to be in a group with, start reaching out, start coordinating with the individuals so we can get those groups formed. Just keep in mind the nature of this project is that your group will be presenting for the entire day, and it's not necessarily restricted to a PowerPoint presentation like traditional, but you can take any number of forms. I encourage you guys to be interactive. I do think it's really good to have an activity for those types of events. So you might want to think about what it is that you want to talk about and how you could actually coordinate an activity with the rest of the class. And I've already talked about there were some really cool assignments last year when we did this project. I hope that there can be some innovation again in that regard, not just kind of straightforward. We want to talk about things that we've already talked about, but things that are relevant to the profession, but not necessarily well known, I guess I should say. Today we got a little bit more reading in bad blood, so we got introduced to 2 very nefarious individuals. So we got introduced to Richard Fuse and to Ramesh Sunny Balwani. Let's talk about Richard Fuse first. This guy is a piece of work, piece of something anyway. He is very, very successful, but he's very vindictive. When I was thinking about Adam McKay doing the version of this doing a movie version of this, I always kind of pictured Will Ferrell playing the role of Richard Fuse. And then I saw the dropout. It's William H. Macy, and William H. Macy, his interpretation is nothing like I imagined, but probably very close to what the person is actually like. But not a very nice person. I do have to say that for all the things that you make him a villain, I was really impressed with his revenge thing, revenge scheme against the CEO of Baxter. So got bought out. His company got bought out by Baxter with $53 million. And if I had $53 million, I'd just be kind of like, hey, I'm done. I don't have to work another day of my life. But he's just kind of like, okay, I'm going to stay on and still be an executive. And then a few weeks later, the CEO fired him. So he's like, oh, I'm ticked off. I'm getting revenge. And had this long scheme throughout the next decade of getting revenge against him, and basically found out that they committed a bribe that was against the Foreign Corrupt Practices Act and brought it to light. And so, actually, the thing was that he filed a lawsuit first, and eventually settled, and I think it was for like $800,000, and went in to get to sign the contract, sign the settlement, and the CEO refused to shake his hand. It was like, all right, revenge back on, and so went against Baxter, found out Baxter was scheming against our Foreign Corrupt Practices Act, and they got hit with a big penalty by the U.S. government. And their existing contract was nullified, and they can't do new contracts for a period of time, and just massive hoopla. And of course, that would be enough for most human beings, but he's kind of like, no, I still haven't driven that nail in quite hard enough yet, so I'm going to go ahead and make sure that the screw is turned all the way. I said nailed and went to screw. I'm not sure what tool I'm using here. He basically went to Yale and had his son kind of rabble rouse saying that they want him off the board of whatever committee he was on, and he resigned 3 months later. So yeah, that was some pretty intense and rigorous stuff. But the end of the chapter talks about how he realized, all right, Elizabeth and her company had created this device that actually was missing a component for patent. So he patented it and then kind of taunted the Holmes family about it. And so they're about to find out what's going on. Suffice to say, depending on who you're rooting for, you're either going to be like going, yeah, or, oh no. When this whole thing gets resolved. The interesting thing is it's going to be Elizabeth Holmes versus Richard Fuse, and neither one of them are particularly savory individuals. So I don't know if you're rooting for one side or the other, but it'll play out in very interesting and dynamic fashion. And then we have one of our primary villains. We have Ramesh Sunny Balwani, Sunny as we're going to call him moving forward. If there was an interesting way to write the book, it's just basically taking this terrible person, Richard Fuse, and then taking this far more terrible person, introducing them in Sunny in the very next chapter. Now, Sunny has been already talked about. It was mentioned a few chapters before, but then there's a lot of discussion. And I will say, I talked about the dropout earlier and the character portrayal of that. This is the betrayal in the dropout is kind of the equivalent of an actor saying, I want to be portrayed by Brad Pitt, okay? Or so somebody being say they want to be portrayed by Brad Pitt. It's like, if somebody ever portrayed my life story, I want to be portrayed by Brad Pitt. I guess actually he's older than I am, so that's not a good idea. So maybe Timothy Chalamet. That would be the worst interpretation. And yet the interpretation in the dropout was almost as bad. They had this just very handsome and dashing British actor named Naveen Andrews play Sonny. And he was always well dressed, and they kind of gave him a little bit of middle-age kind of characteristics. But for the most part, very handsome actor playing Sonny. And if you see pictures of Sonny, he looks nothing like the actor portrayed him in the TV show. And it doesn't even dress like him. They described Sonny as kind of like a 70s swinger type attire, you know, wearing blue Gucci loafers. And whenever he wore a shirt, his top 3 buttons are always out, so he had that chest hair spilling out. And you know what? I will admit that I don't always have the best taste, and even I was kind of sickened by the description, to be honest. So, but Sonny comes in, and this is actually, he's introduced as part of the introduction of one of Elizabeth's college friends who's taken a job. And we talked and learned about how Sonny has got this nasty temper, and how he's just not really very favorable or nice individual at all. And so what do we know about Theranos before this? Like, there was a lot of turnover in Theranos in the previous chapters we read, and then they actually specified in this chapter, I believe it was chapter 6, said that turnover increased when Sonny came on board. So it's a little bit like, just, things going catastrophically wrong, and then just basically saying, let's see if we can make them more catastrophically wrong. And so Sonny has very, very sketchy background in software engineering, and I think there's a strong argument for his wealth was basically that he was in the right place at the right time, because he was the president, he was promoted to president and chief technology officer of, I think it was commercialbid.com or something like that was the name of the company. They were bought out by another e-commerce platform just months before the internet bubble burst. So he made $40 million and then just kind of said, all right, I'm not sure what I'm going to do with my life. I got $40 million now. I can pretty much do anything. So he drives cheesy cars. He's got license plates. One was Das Kapital, which was the marks about Marx. The other one was Vici. I came, I saw it. So yeah, a lot of just hedonistic crap like that. And so Kim's on, and he's supposed to be bragging about how he's going to improve the software capabilities of Theranos, which is not really the problem with Theranos. The problem is the dysfunctional corporate culture, and introducing Sonny kind of exacerbates that problem. But what was he said? He was telling people, bragging to people that he had written like 1 million lines of code, and they were kind of questioning that. Because Windows developers, they wrote like 1,000 lines of code every year. Even if he was 20 times as productive, that would still take 50 years. So he was not that old. Anyway, Sonny is going to be a very interesting character moving forward. It's perfect foil. There's actually a term, I'm not going to spoil it, because a term that I did not know that you all will probably pick up, because it actually has an interesting cultural reference, but it'll come up in a few readings ahead of time. That explains the relationship between Sonny and Elizabeth, and it's kind of fascinating to talk about recent cultural phenomena. Anyway, that's where we're at right now in Bad Blood, and we've got a lot to look forward to moving forward. By the way, if we're talking about where Theranos is right now, they still don't have anything resembling a functional product. They basically have gone to like 3 different test sites. Pfizer is now abandoned, saying, yeah, we're not going to do this contract. There's just too much wrong. And what did Elizabeth blame it on? It says, yeah, people had their air conditioners on, and that was the problem, that our product wouldn't work. And yeah, so we still do not have an operational product. And so, yeah, that's where we're at right now. Okay, now we have some CPA prep. This is the best part of the day. We start talking about CPA prep. So let's go ahead and get started on that. Auditor's engagement letter, most likely to include what? So let's just talk really quickly. We make sure that we are clear on this. Audit engagement letter contains 3 critical components. It does contain multiple components, but 3 that are going to be in every engagement letter. There's going to be the objectives of the audit, the manager's responsibility, and the auditor's responsibility. So that's what we're looking for, but please keep in mind when you're looking for those, you do need to specify what those represent. And if we say manager's responsibility, then whatever comes after that actually has to be manager's responsibility. So what do we think? Management's acknowledgement of its responsibility for maintaining effective internal control. Does that sound like something we include? Yeah, and so A is our answer, but let's go through the rest. Auditor's preliminary assessment of risk factors related to misstatements arising from fraudulent reporting. So that's something an auditor would do, but that would not be in the engagement letter, okay? That's something that we would do after the engagement letter has been resolved and we actually start looking at the client, that we start performing test work. Reminder, the management is responsible for active noncompliance with laws and regulations committed by employees. Is that a responsibility that we talked about with respect to management? Probably has some bearing, but it's not a financial reporting responsibility by any stretch of the imagination. So C is out. The request for permission to contact the client's lawyer for assistance identifying litigations, claims, and assessments. Okay. I do think that engagement letter could include this, but this is not one of those three primary sections that we talk about. So A is going to be a clear answer here. Which of the following would prevent an auditor from accepting a new client engagement? Okay. So what we know about client engagements is basically whenever we have accepting a new client engagement, one of the things we have to suss out is the honesty, integrity of management, and whether or not they have contentious relationships with previous auditors, or if they haven't been previously audited, what is the reason behind that? There's a number of different areas, but one of the biggest areas of concern is that if an auditor takes a new client on and they think that they might be held liable for problems associated with audit, it's less likely that the auditor will accept that new engagement. So keeping that in mind, auditors not have a clear understanding of a client accounting methodology. Okay, is that going to cause us from not accepting a new engagement? No, not at all. We can gain an understanding of the client accounting methodology. That's something we can do over the course of the audit. Management has a reputation within the business community for materially overstating its revenues. Wow, that has to do with that integrity thing we talked about. Is integrity important in an audit? Yep, and it looks like there's a problem here. So B is our answer, but let's go through the rest. Client's accounting system is completely computerized and the audit staff will be unable to access accounting data without the help of an information technology specialist. Is there a simple solution to this particular issue? Yeah, enlist the help of an information technology specialist. That's a very easy answer to that. Accounting data is only maintained in paper form for a very short period of time. So is that a problem? Probably not. We're probably going to do most of our work electronically anyway, so that wouldn't be as much of an issue. Unless they're saying it's only maintained in paper form for a short period of time and none of it's electronic. That might be a problem. That's not the intuition that we would have here. So B is our answer. After field work audit procedures are completed, a partner of a CPA firm has not been involved in the audit performs a second or wrap-up review of the audit documentation. The second review usually focuses on what? Okay. So keep in mind, we're talking about the review that occurs at the end, not the engagement partner review, but the review of the partner who's going to be external to the engagement. And this is going to be supposed to be the idea of an independent, unbiased review of the process to make sure that everything is sensible and intuitive. So let's go through the answers. Evaluation of significant adjustments made by the engagement team and the related conclusions forming the overall conclusion. Is that something that would be contained or the purpose of the documentation? Is that something that we can say is consistent with that? Yeah, that's an exact description of what the documentation is supposed to contain. So that's definitely something they would look for. So A is our answer. But second review does a focus on fraud involving clients, management, employees. Keep in mind that fraud is the only responsibility we have as auditors if it has a direct and material effect on the financial statements. So it's not all fraud, just full stop. Okay, so this would not be something that would be a focus of the review. It would be an incidental something. It's an incidental something to look for, but not a focus point. Materiality of the adjusting entries proposed by the audit staff. Again, this is something that the independent reviewer would probably look at, but it's not the focus of their efforts. Communication of internal control weaknesses to those charging governance. They probably want to make sure that that took place, but that would not be something that would be a focus of their efforts. So A is kind of the clear answer here, just based on the nature of documentation itself. Auditors are required to establish an understanding of the client regarding the services that could perform each engagement. This understanding generally includes what? So this is going to be kind of auditors and management's responsibilities and delineation of those. So let's just go ahead and make sure we're clear on this. I know I've said this at least a dozen times in related classes. Manager's responsibility for fair presentation and preparation of the financial statements, okay, and the design, implementation, and maintenance of internal controls. Now, there's a little bit beyond that, but that's an easy way to simplify it, those two responsibilities. Auditor's responsibility is for testing financial statements to make sure that they are free from material misstatements, and testing internal controls to make sure they're designed and operating effectively. At least that's kind of what your natural assumption is. The auditor will not always test internal controls, but for the most part, we're going to make that assumption, and just with that blank slate situation. So underlying understanding generally includes auditor's responsibility for determining preliminary judgments about materiality and audit risk factors. So auditors have responsibility for thinking about those, but is that something that's going to be established with the client? Is that something that's even going to be disclosed to the client? No. The client has no information about what our assessment is of materiality or audit risk factors. Manage responsibility for identifying and mitigating factors the auditor has doubt about the entity's ability to continue as a going concern. All right. So this is something that we probably would think about if we believe there's substantial doubt about the entity's ability to continue as a going concern. That's not something we would think of up front. Okay, we don't establish that after the fact, after we've identified that over the course of the audit. The auditor's responsibility for ensuring that those charged with governance are aware of any significant deficiencies in internal control that comes to the auditor's attention. So do we have to communicate significant deficiencies in internal controls or financial reporting to those charged with governance? Is that one of our responsibilities as an auditor? It is in fact yes. Okay, so this is likely our answer, but let's do D. Manage responsibility for providing the auditor with the assessment of the risk of material misstatement due to fraud. Okay, so risk of material misstatement, what two factors does that or contained within that? Error risk. Error risk and one right next to inherent risk. Control risk, yeah, control risk. Inherent risk and control risk. Are either of those assessments shared with the management team? No, this is completely and totally an auditor assessment. We don't share that information with the clients. Okay, they know that we do it, but they're not privy to what our assessments are. So D is not a correct answer. Which of the following would not be considered a significant audit finding that should be included in documentation? All right, so keep in mind when we talk about anything related to documentation, what goes in the documentation is support for the overall conclusion reached by the auditor. So the support for the opinion that was issued. There's also a caveat to that. If information is going to be included that is inconsistent with the opinion, that also needs to be included in the documentation. But anything that basically allows us to reach a conclusion with respect to the opinion reached. So retirement of the accounts payable manager and subsequent hiring or replacement. Is that something that we need to go in the documentation? No, that seems really willy-nilly. Yeah. So A is probably our answer, but let's go to the rest. Discovery of material sale recorded in the current year that properly belonged to the subsequent year. That's probably a recording issue, and if not corrected, would result in a misstatement. So yeah, that would definitely be something. Termination, there's substantial doubt about the entity's ability to continue as a going concern. Do we have responsibility for that as auditors? Yes, we do. So that would be included. Implementation of a new accounting standard to account for complex and unusual transaction. That would definitely affect how the audit works, and probably affect comparability from one period to the next. So that's something that would be considered something to be included in the documentation. So yeah, these three all pretty clear audit issues. This one just incidental. Which of the following statements is the most accurate regarding audit documentation requirements? Okay, all right. So we just talked about kind of the consideration with the auditor or audit documentation. Let's go through our answers. Auditor should document findings that result in a modification of the auditor's report. So basically, we're talking about anything that could result in an opinion other than unqualified or unmodified, anything other than a clean opinion. Should that, or even if we're talking about just the explanatory language, should any of that information be included in the audit documentation? Yes, all of that information should be included in the documentation. So A is our answer. Different audit procedures are performed due to a lack of responsiveness by the client. The lack of responsiveness should not be included in the working papers. So we tried to do something. The client did not allow us to do something because they didn't respond properly. We're just going to say, oh, well, we can ignore that. Does that sound like something we would say as an auditor is reasonable? Probably not. Okay, probably not. If an oral explanation serves as sufficient support for the work the auditor performed, the explanation should be documented in the working papers. So this is kind of an antsy one because we're saying we get enough assurance through observation and inquiry that we're satisfied with the nature of that. Okay. We have to explain the reason for that. That sure sounds like a good answer, but keep in mind if we're talking about a scenario where an oral explanation, where observation inquiry is sufficient, we're talking about an area where the amount of assurance that's required is very minimal. There's no corroboration required, and that's probably obvious on the nature of the account. So we probably don't need to provide an explanation if an oral explanation is sufficient. If the results of audit procedures indicate a need to revise the previous assessment of risk, the new assessment should be documented. The original assessment should be removed. We were doing so well up until the very end there, okay? So if we would need to revise the previous assessment of risk, okay, whatever type of risk we're going to talk about, new assessment to risk should definitely be documented. But our previous assessment of risk should still be included in the working papers because we'd have to explain why we changed at some point during the audit. So the original assessment should be removed. That kind of negates this particular statement right here. So D is not one answer. So A is our answer. All the rest have a little bit of fatal flaws there. So I wouldn't blame you if you said C because that's a tricky one. The internal control integrated framework contains objectives that cover each of the following, except, okay, so what are the objectives of the COSO internal control integrated framework? So there's reporting, operations, compliance, okay? We have to make sure we have controls that are in place in each of those different areas. So let's go ahead and go through these. Ensuring that all applicable laws and regulations are followed. What's another word for laws and regulations? Compliance. So that sure sounds like compliance, okay? Transparency of internal and external financial reporting. Okay, so we have reporting. Safeguarding entities' assets against potential losses. Would that be considered part of operations, you think? I would think that would be a very strong operational control. So we can probably say that. We can even say that's even a reporting control. So, but operational control for sure, but even technically a reporting control. So it overlaps with multiple. High-level goals established by leadership to develop the entity's mission. This sure sounds like something related to COSO. What does this sound like? Control environment, but is that an objective of the COSO framework? No, that's a component of the COSO framework. So the determination of that terminology is really important to note, okay? Keep in mind the objectives are kind of more overall scope, whereas the individual concerns, those are outlined in the components of the COSO framework. Which of the following is a management control that can likely improve management's ability to supervise company activities effectively? So this is a really important one to think about. When they ask about a management control, what level of the entity do you think this is going to affect? What do you guys think? Management control. It's going to affect one location. It's going to affect a few locations. It's going to affect 30% of the locations. It's going to affect 35% of the locations. I got all day, guys. It's 37% of the locations in the entity. What percentage of the locations do you think it will affect? Close to 100%, okay? Close to 100%. All right. I was waiting for you guys to get to that 100% threshold yet. Yeah, so close to 100%. So it's going to talk about something that affects the organization as a whole. All right. So let's go ahead and go through this. Monitoring compliance that would with control requirements imposed by regulatory bodies. Okay. I think this could be a management control, but it doesn't necessarily relate to supervision of company activities. It's more about compliance. Okay. Limiting direct access to physical segregation of assets by physical segregation and protective devices. Is every part of the organization going to have to have physical controls over direct access to access? Probably not. This is probably going to be very important for the areas that have a flow of assets consistently. Like a warehouse would be a really good example of that, an inventory warehouse. You might make an argument that we want to have some controls over assets like computerized systems and technology. But for the most part, it's going to be less relevant in other parts. And so we're talking about that's going to be a locational issue. Establishing budgets and forecasts to identify variance for expectations. Hey, we have something for Dr. Otero. What do you guys think? Does this sound like a good management control that could actually supervise company activities? I would like that. Okay, that's an operational control, but it actually relates to the entire organization's operations. So yeah, C is our answer. D, supporting employees with the resources necessary to start their responsibilities. This is a tricky one because employees are going to have different responsibilities. So we can't really categorize that as an overall control. It's going to be dependent on different management levels. So not really an overall entity issue. Okay, let's move on. So we've got some test work on property, plant, and equipment. And here's the interesting part. We've got a whole bunch of tick marks, but you have to identify based on the nature of the tick mark what's going on here. All right. So by the way, I apologize. I didn't make my these spaces large enough to fit the entire answers there. So I know that's probably going to annoy some people. And I apologize. I didn't do things deliberately to annoy you all. It was just mostly just time convenience. All right. So let's go ahead and look at the tick marks and see if we can determine based on what the tick marks represent what we're looking at. All right. So the first one should be pretty straightforward. This tick mark, we got a triangle or an arrow pointing to the right, and it looks like it's based on the year one balance for property, plant, and equipment, as well as the year one balance for accumulated depreciation. Now, we're in the audit of year two, so the ending balance of year one would basically be our beginning balance, correct? Okay. So what would we do if we want to confirm that the beginning balance information is correct, or if we wanted to confirm that last year's year-end balance is correct? We want to look at current year audit information. No, what audit information would we be looking at? Prior year, okay. So, by the way, you're going to see me get annoyed, okay? I'm going to say traced amounts to prior years audit documentation. Okay. I will say, I'm not sure. I don't believe the word trace is used correctly here. In fact, I know it's not used correctly here because we're going backwards in time. So ignoring the words trace not used correctly here, this is going to be our best answer. I already warned you that this is something you're going to run into a lot in this particular scenario. So ignore the word trace being used incorrectly. This is not a completeness test, but for the most part, otherwise we're in good shape. All right. Then we got this arrow going up and down. So this arrow going up and down only occurs in one place. It occurs in lands and additions of land. So if you were to buy a piece of land, what document would you look for to prove that you have ownership of that land? Yeah, it's like those old West cartoons. Like, I took the deed to the ranch, you know? Okay. So we're looking for the deed or some other type of documentation that represents that. So we can look through that documentation, and we're going to be examining supporting documentation, but we're specifically going to be looking for the supporting deed, purchase contract, cancel checks, assets of the city ledger, board of directors minutes, so on and so forth. The supporting deed is the big giveaway right there. All right. Then we have the integration, not integration, the squaring function. Square root function. That's where we go. That's the symbol that we're looking at right there. Actually, could have just called it check mark and been over with, but hey, man, why make things simple? So this goes on buildings and fixtures. Okay. Now, what's a common characteristic of buildings and fixtures? We could necessarily buy buildings and fixtures that already exist, but could they also be assembled? Okay. So there's going to be some construction associated with buildings, fixtures in most scenarios, especially if we're talking about new acquisitions. So if that's the case, we're going to still examine the supporting documentation, but we're going to be looking for work orders, engineer's reports, cancel checks, assets, director's minutes, so on and so forth. The work order is kind of a big giveaway there. All right. Then we have equipment for $90,000 edition, which is kind of this, I don't know what symbol that is. I'm sure it's a Greek character, but I'm not sure which one it is. Anybody know off the top of their head?
I think it's an alpha.
An alpha? Okay. Maybe. All right. All right. Then the more you know. All right. So equipment for $90,000 editions. All right. So could equipment be considered a form of procurement? Normally, we think of procurement as acquiring materials or services that we need for operations, but can we acquire equipment in a similar way? Yeah. And so what do we know about documentation associated with procurement? You're going to have vendor invoices, cancel checks, asset city ledger, blah, 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 blah. But the vendor invoice is going to be the most appropriate because we'll buy that from someplace. So yeah, identification there. All right. Moving on. Now we have an interesting one. So we have equipment here for disposal of $12,000. So this is an interesting one. It looks like they disposed of a certain piece of equipment. So we're looking for an answer that represents the most likely disposal piece of equipment. And I believe they gave some information up here about the disposals. Maybe I'm wrong about this. Okay, I could be wrong. I think it's something else. But let's go ahead and look at the answers. So which one of these looks like a disposal transaction of equipment? Sale of computers, okay, or computers equipment, okay. If we sell them, would we recognize a reduction in the cost of the computer? Yeah. And so you will notice that there's the key here, the sold 6 fully depreciated computers, is that we have a $12,000 transaction here. We have an accompanying $12,000 transaction here, which is interesting because that means their book value is what? 0, because their entire depreciable cost has actually been recognized, or depreciation has been recognized. So we're recognizing the sale of the computers at a fully depreciated amount, which is why it says fully depreciated computers, no audit procedure necessary. Why is that? Because we're auditing a $0 account, a $0 transaction. I would consider that probably not material. Anybody want to argue about the materiality of $0? Well, they have some value, Dr. Barnes. There's inherent value, otherwise they wouldn't be sold. Okay, just like, come on, don't make my life more difficult, guys. Don't make my life difficult. It's Friday. Want less difficult, more difficult, not more difficult. All right, here we go. This is an interesting one. So we've got a circle with a slash through it, as a tick mark, and it looks like we've got a reduction in buildings and an increase in fixtures. What does that scream to you guys when you see something like that? A reclassification entry. It looks like something was reclassified. So was something properly or improperly classified as a building, or was it improperly classified as fixtures?
Improperly classified as building.
Yeah, building, and we need to reclassify it as fixtures. So basically, our answer is going to be reclassification entry for fixtures, erroneously recorded as buildings. Good. All right. Moving on, we've got some arrows over here. So these arrows to the right, these are actually real arrows, not the triangles pointing to the right. The arrows to the point right. These are the year 2 balances. Okay. So what period of time are we looking at now? We're looking at the period under audit? Yes, okay. And what is going to be our primary sources of support as an auditor that we're going to cross-reference this information to? Current year, what documents? Trial ballots, anything else that possible jumps out? General ledger, yeah, general ledger. Those are the two that are listed there, trial balance and general ledger. Okay, and then finally, we've got these diamonds over here, the diamonds that are associated with this provision. What is this provision referring to? What do we call a provision associated with depreciation? The contra asset account associated with depreciation or with the property, plant, equipment. The reduction in value over time. It's accumulated something. Accumulated depreciation. Okay, there we go. They don't actually give that to you, but they're actually saying this is accumulated depreciation. Okay. Actually, technically speaking, I think we're talking about provision because accumulated depreciation would be all of these provisions added together. So technically speaking, I think when we're talking about this provision, we're talking about depreciation expense for that period. But remember, accumulated depreciation is just all depreciation expense added together. This leads to an interesting question. Let's say I give you a depreciation expense amount and I said, can you determine if this is close to accurate? Could you do that as an auditor? What would you need to know? You need to know the types of assets. You need to know what their value are, residual value, if any, the length of the useful life, and the type of depreciation method used. Okay. Somebody's going to say makers, and you can say, we're not doing tax here. Okay. Yeah. But as long as you have that information, can you develop an expectation for an estimate for that? So yeah, that's an easy way to test. Okay. We can actually test that using an analytical procedure. Which answer kind of comes up closest to what we would be doing if we were kind of using an estimate calculation? Test the reasonableness of this calculation. Yeah, we can actually recalculate and see what our provision would be compared to what there is and determine if it's close enough. If there's a difference, we'd say, hey, based on all the information that you gave us, this is what we believe it should be, but your difference is your amount is different from that. Why is what gives? Why is that amount different? And they'll hopefully have a ready explanation for why they expense more depreciation expensed or expense less than you expected. All right. So how'd you guys do? Pretty well? Excellent. I should feel good about this one. This was not an easy series of questions. So, but this is, again, trying to backward engineer about what's happening with tick marks. And if you've got most of those, you should feel pretty good. All right. Got 8 minutes. I could actually share some pictures of some images of Sydney's cats again. I guess I don't want to record doing that. So I'm going to stop the recording, and then Sydney, you can share some more images of the cats. And then I'm going to stop recording. All right.
Leo ran away.